as I said in my initial chat message, this is my final preparation class with you ahead of this particular case study exam. It does mean that there's a little bit of room for manoeuvre in certain respects if there are certain things that I can help you with in particular. I know that at the end of the last class there was a request, so I'm certainly going to focus a little bit on that. Although I think it's good practice. It's a particular area of the P2 syllabus. P2, I think, although strictly speaking, the case study examiners are looking across the syllabus for P2, E2 and F2, there is a bias towards the P column, the performance column, and it would come as no surprise to anybody who sort of takes that view to see that they do like to ask quite a lot of P2 questions, and the P2 questions tend to be quite demanding. Right, well, at 3 minutes past 3 minutes past 4 here, which I think is 3 minutes past 7 with you, or 1903. I will move on. These are the topics that I'm covering, and you've seen this slide in all the previous classes. This class, we had a request for an aspect to do with products and pricing. I think it was from Ziad, but you're all welcome to correct me if I've got that wrong. So what I've done is I've taken the syllabus. Let me move these around so that they don't block our vision at the moment. Let me move them right down there. And just remind you of the P2 syllabus. The P2 syllabus provides the competencies needed to analyse, plan and manage costs to support the implementation of the organisation's strategy. It shows how to manage and control the performance of various units of the organisation in line with both short-term and long-term strategy. So part A of the P2 syllabus constitutes 25% of the marks in a typical O2 exam, and it's not going to always be tested in a management case study, but when it's a quarter of a third of the course, if that makes sense, then it's a 12th, and you can't help thinking that it's going to turn up quite a lot. I'll give you a bit more background on how much it's turned up over the last 2 sets of exams in a few minutes, but let me just run through what's in it, and it's worth it for me to tell you where we're going with this. Having gone through what's in it, I then intend to look at how it was tested in the most recent times it was tested, and also to try to think of how it might be tested in relation to SparkSpace. So I hope that makes sense. I'm just going to double check. At the moment, there's only 3 of you, so I don't know if today's a particularly busy day and people are having difficulties getting to the class. So looking at these, we've got evaluate activity-based management. Within the CIMA scheme, and I know that the majority of those of you attending and of those who are watching this in the recorded format have come to this case study with exemptions, but the exemptions that these have given you are exemptions from operational level exams and syllabuses, and the OT exams at management level. So when they list in here, evaluate activity-based management, that's building on a knowledge of activity-based costing, which is part of the P1 syllabus, and a recognition that activity-based management incorporates activity-based costing and activity-based budgeting. So we'll look a little bit at that and we'll see where that goes, because within the P2 syllabus, they develop it. See more in a minute. Evaluate total quality management techniques. I have had a little look at that up previously, so I'm not going to do very much in terms of TQM, but certainly you need to remember that TQM is about getting it right first time and continuous improvement within the organisation, and that the only way that TQM can really work is if it is adopted throughout the organisation from the very top. So the directors and the chief executive are all committed to TQM, and that way it will work well. It won't work well if it's on an individual department basis. Then we'll look at discussing techniques for enhancing long-term profits, and I will show you the indicative content in a minute so that you will see what that's made up of. But certainly we're looking at target costing and life cycle costing. And then the application of learning curves to estimate time and cost for activities, products and services. The products is just hidden. And what I reckon that learning curve has always been a popular exam topic long before P2 was an OT exam, and long before there was a management case study. Learning curves was a big deal because normally candidates coming in at management level hadn't come across learning curves in their previous studies. So I think that we've got opportunities for learning curves within our particular pre-scene. Right, moving on. This is now me looking at the indicative content within each of those headings. Activity-based costing to derive long-term cost appropriate for use in decision-making. Activity-based management and its use in improving the efficiency of repetitive overhead activities. Now, a lot of aspects to do with ABC is highly numerical, and I've explained to you before that this exam will require you to explain things rather than carry out calculations. So you do need to be able to evaluate activity-based costing rather than carry it out. And so we would be looking at its application and usefulness. Certainly, I've got ideas that I will try and expand on in terms of which bits of Spark space ABM would be more applicable to and which ones they would be less applicable to. ABM and its use in improving efficiency and repetitive activities, and then the cost, the direct and activity-based cost methods in tracing cost objects. And we will look at product profitability analysis, customer profitability analysis, distribution channel profitability analysis. And I think in that respect, this particular case study would need quite a lot of additional information within the unseen if they were adopting the distribution channel approach. So it may be more likely that we'll have product profitability or customer profitability rather than distribution channel. Looking at the enhancing long-term profits, which is the third of the points on the syllabus, we'll look at target costing and the determination of target costs from target prices. I would imagine that, oh, lovely, nice to see Kamari here now. But I would imagine all four of you, and those of you watching this in the recorded format, are well aware that target costing is the costing where you start with a predetermined selling price and you deduct a required profit margin, and then you have a target cost. And having got that target cost, you may well look in more detail at the variable elements and fixed elements and see whether or not, that's fine. It's all being recorded, so anything that you missed, you'll be able to catch up on in the recording. But certainly, we're working through the P2 section A part of the syllabus in response, I think, to a request on Monday. I think the request was from Ziad to look at products and prices. And then the value chain and the management of the contribution profit generated throughout the chain. And I'm happy to digress onto that if that's any help. It's interesting when I go through how this has been examined in the past, how significant the value chain aspect has been. Life cycle costing and its implications for marketing strategies is an interesting one, and if any of you are particularly keen on that, then please say so. I think that within the limits of 2 hours, I can't do absolutely everything, but I can talk a little bit about that if you need to, because it is something which we'll see hasn't been tested at all in 2016 so far to date. Bear with me a minute, I'll just blow my nose. Okay, and then the learning curve one, apply learning curve to estimate time cost and activities time and cost for activities, products and services. Learning curves and their use in predicting the product and service costs, including the derivation of the learning rate and the learning index. Now, you're more likely to have to explain the application of the learning curve rather than carry out the application itself. And I do have a view on this. I think it is well worth our consideration. I think it's different for different products within the Sparkspace portfolio. We're well aware that we are competing in two different market areas. We've got the servers, which are essentially competing on price with other firms that are doing the same sort of job. And we've also got the HPC, which is in a more differentiated market. And as such, we are competing in terms of our ability to satisfy the customer and using a more differentiated approach. In that respect, the learning curve application will vary. We won't get the same application of the learning curve in both markets. Okay, returning now to the evaluation of activity-based management. These are some of the things that I've picked up on from the pre-scene. The recognition that we are, of course, selling these servers in a price-oriented market, and in order to try and differentiate our product, if we are going to be able to persuade customers that our servers are worth buying, although other people are selling servers at a higher price, then they've got to have a recognition of the justification for paying us slightly more. And our way of trying to do that is through these 4 areas. Design consultancy, in other words, a member of our staff goes out and talks to them at the time when they're placing the order, and we do our best to make sure that the server is what the customer needs, and we do that by recognizing the customer's needs and then demonstrating that how we are able to satisfy those needs through them having our servers. Then we've got the installation, the maintenance and the assembly. So sure, it is a price-oriented market. We would need to be particularly careful about how much these additional services are costing us, because there is a danger that we attract more custom. I mean, for example, if we are simply charging a little bit on top, then the customer could end up getting an awful lot more for a very small amount of extra. I've got a slide that I will be using later on, but it's probably worth me showing you, even at this early stage, how much we are making after expenses on each server that we sell. So let me just scroll through and show you. I'll come back to this when we look at value analysis, but here I've got two figures. On average, when we sell server hardware, after we've deducted expenses, we're getting not quite 550 Westland dollars. On average, when we are selling HPC hardware, after we've deducted expenses, we're getting just under 3.3 million Westland dollars. So there's a big difference between the two. It may be that averaging is not an appropriate approach. It may be that the range of different prices that customers pay mean that it becomes meaningless. But from a generalized point of view, you can see how tight the margins are on the server hardware. If we're making a surplus of 541 before we've paid out staff costs and other fixed cost expenses, we would need to be sure that if we were selling the server hardware on the basis of a differentiation, that we were able to genuinely earn a higher return on that money. So looking at it here, if we're going to make ours differentiated more, and given that this is a market which is very price oriented, then we would have to make sure that our design consultancy, installation, maintenance and assembly was perceived to be so good that it justified a price which was over and above the price that it costs us to provide it. So that's quite an important point. As you can imagine, design, installation, maintenance and assembly are not costs that vary with the number of servers that we provide. It may well be something which varies for other reasons, in which case we would regard them as fixed costs, and they could be the cost pools that we use when we are dealing with activity-based costing. These could be our 4 key cost pools, and as such, they would then identify for us how much a specific server was costing us and whether or not we were selling it for sufficient price to make a profit. Okay. Right. I can see on my list. I had Ultimate Access were on my list a minute ago. Don't quite know what's happening. But I'm now back down to Kumeri, Suchi, Trost, and Wilfred. So nice that you're all still here. I thought I had more a minute ago, but anyway. Let me now resume, and we'll now look at how you could be asked questions. I think I sort of hinted at this already when I was looking at the syllabus, and we were talking about this. We can see that there's a real opportunity to look at the product profitability, and I was particularly concerned with that a minute or two ago when we were looking at the actual what I considered to be the potential cost pools associated with these servers. This is useful because we may well recognize that as a big firm in the server business, it might not be worth our while to be providing servers for small firms. The small firms may well be more price sensitive, and also they may not be paying, they may be more concerned with price than with quality, and as such we might be more willing to focus our work on the middle market, the medium-sized firms and larger, and leave the smaller firms to buy their servers, perhaps off the peg from retail and server producer mixed companies rather than a big operation such as ourselves. We are well aware that we've got constraints in terms of capacity, and given those constraints, we will be better focusing our revenue on those things that earn us the highest returns rather than simply that keep us busy. Customer profitability, I think, would fit in with that. In one of the earlier classes, I made reference to possibly serving Eastland, a country which I made up. But given that we are in Westland, Eastland would make a fair bit of sense. And if we are dealing with the Eastland government, we may well be providing a server for their National Health Service or their other parts of their government departments, in which case they could become what we would consider within a Mendelow's matrix type scenario as a key player. So within the customer profitability, we're able to recognize those customers that are worth our while to supply. And I said I found it difficult to come up with a way in which they could examine the distribution channel profitability. I think that would be more likely in a product sort of scenario where we might be selling to warehouses that then sell to wholesalers, that then sell to retailers, that then sell to end customers. We're not really in that business. I think they would have to put in an awful lot more of additional information before we could carry out a distribution channel profitability analysis. So the two here, product profitability and customer profitability, would be the ones that I would think would be more likely to be on the examiner's shortlist. Right, this gives you an opportunity to raise any questions in relation to activity-based management. So, Ziad, nice to see you. Hope there's nobody here who I haven't welcomed. Aswadi, in case I didn't welcome you when I saw you before, welcome again. we are going through the P2 section A because that's the section of the syllabus that most closely links to the request to look at pricing and profitability, pricing and products, which was my request from the end of Monday's class. Right, now, are there any comments and questions that you have regarding evaluate evaluate activity-based management? Happy? I wouldn't be embarrassed to ask a question even if you thought, oh, I might look silly or something, because no, Suchi, either that's yes or yes, you're happy, or yes, you've got a question. Oh, happy. Oh, I'm so pleased. Okay. Well, in that case, I'll move on, just so that those of you who are perhaps later join us can see where all this fits in. A quick overview of the syllabus itself. And what I'm doing is I'm working through these. I'm focusing on 3 of them. Evaluate activities management. I felt that I'd addressed TQM in a previous class. I'm looking at discuss techniques for enhancing long-term profits now, and I will then look at learning curves afterwards. Okay. Right, discuss techniques for enhancing long-term profits. And I will just concertina up my participants list, if I can. I think the little pictures of each of you indicate whether you're watching this on a mobile phone or whether you're watching on a computer. Right, discuss techniques for enhancing long-term profits. Value analysis. It's well worth it for me to remind you what value analysis is, and then we can go on and think about it in the context of Sparkspace. There's 2 areas, and you could imagine your managers here at Sparkspace, they probably won't want you to split hairs. So if Joel Whitman asks you a question, or Peter Snyder, or any of the other directors, I wouldn't be expecting you to write about the aspect of value analysis at the design stage or value analysis once something's up and running. I think that we would just regard it all as value analysis. Now, the importance of me making a distinction between the 2 is that we need to understand that when products are designed, we design in cost. So 80% of the total cost that we will incur will be committed at the design stage. So it's very important before we enter production that we make sure that everything that we are spending money on is genuinely adding value in terms of the saleability of the final product. And for us, that must be very, very important for the standard servers. If we're going to try and compete, we need to be competing in terms of price, ultimately. Even if we've tried to make a little bit of differentiation, we've managed to get installation included, which we consider we do better, or anything like that. ultimately those customers are very price conscious. If we can drive down the cost that we incur when we build these standard servers, the ones that we are given a lot of information about in terms of the blade servers going into a self-contained computer and so on, and how we put them all together, the racks of all these standard size and large data center interconnected as clusters and all the rest of it, then if we can take out unnecessary cost at the design stage, we will have a price advantage, well, cost advantage over our competitors. And that cost advantage we can use in one way or another. Either we charge slightly less than they do, because we can make the same amount of profit from a lower price because we've got a lower cost. Or we charge the same price as our competitors, but we simply make a higher profit. So whichever way we do it, we are at a distinct advantage. So value analysis, particularly the design stage value analysis, is absolutely vital and will give us a distinct competitive edge. And we need to look at everything that we are designing into the products that we're selling and make sure that those characteristics are genuinely adding value. In other words, enabling us to charge a higher price than it costs us, and they're not simply adding to our costs. That's the first type of value analysis. The second one has got less saving opportunities, but that's once we are up and running, we then review the way that the product is being produced, and we see if we're able to take out unnecessary costs without making the product any worse than it already is. So we want to maintain the quality at a lower cost. So I've written on this slide, even for bespoke servers, because of course we're under less price pressure with the bespoke servers. There's bound to be some price pressure, but if we are sufficiently differentiated, then our customers are recognizing that it's worth it for them to pay a much higher price. And sure, I showed on the slide that we looked at a few minutes ago, there was an average price for a HPC of about 3.5 million. Sorry, an average surplus over expenses of about 3.5 million, which I then said may be a meaningless figure, but at least it shows that we are earning quite a lot, much more on those than we are on the standard servers. But even with those, it's still worth it to carry out some value analysis to make sure that as we design those systems, they are not incorporating any costs that we don't benefit from in terms of the added value, in terms of the price. So we need to look at the skill needed to assemble for the optimal performance, and that's quite important because that will show us the labor cost requirement. At the moment, when I look at my surplus, I'm simply looking at the expenses that are taken away from the revenue that we generate from each product. And I took my information from page 29 of your pre-C material, and on page 29 the staff cost is shown separately further down. So I don't want to be under any illusion that this is a gross profit or contribution figure. It's simply the difference between the cost of expenses and the revenue that they generate. Value analysis fits into target costing, and value analysis is what you do when you've recognized that the target cost is lower than the expected cost that your engineers have worked out that you would incur, and you then go back to try and establish how you deal with that gap between the engineering cost and the target cost. And value analysis is all about looking at those costs and trying to bring those costs down so that the end product isn't in any way damaged, and we are still able to sell just as many at the same price, but we are able to produce them at a cost that enables us to generate the required profit. And then the final of our sections is the enhancing long-term profits. Now, I gave you a moment on the previous one to be able to ask me questions about activity-based management. I'm very happy from Suchi, but now is an opportunity, if you wish, to address anything to do with the techniques for enhancing long-term profits before we move on to learning curve. Okay, I'm assuming that the happy that Suchi wrote to me in relation to activity-based management applies to all of you in relation to long-term profit techniques. Okay. Oh, we've lost Ziad. Oh dear. Okay. Well, hopefully he'll be back with us in a minute. Right, next is apply learning curve to estimate time and cost for activities, products and services. And on that, we might as well just think about what they're doing. All the servers are built from bought-in components. Fair enough, we've thought about the power of suppliers. We think that these manufacturers are a possible threat to us because they could move into this area, but they look unlikely to do that. But the techniques that we use to convert those bought-in components into the saleable servers are very similar. We're told that the methods that we use, the techniques, whether we are building a generic server or whether we are building a bespoke server, are similar. And this is worth just trying to visualize that it happens in a lot of situations, that there are processes fairly early in the manufacturing of products where the learning curve would be applicable, and yet there would also be processes much further down the line where the learning curve wouldn't be as applicable. So it doesn't mean that products suit learning curves, it's processes and activities in order to make those products. Now, the server assembly would suit a learning curve scenario. So as it comes into Sparkspace and the assembly is taking place there, we would expect that the staff working on that assembly would be able to, well, in the UK we often use the expression get up to speed, which effectively means go through the learning curve stages so that they become able to put together the servers more quickly, because they're doing something very similar each time they put one together. And fair enough, part of it, much of it is driven by the mechanized processes, but the pre-scene has told us that there is still a noticeable amount which is done by human beings. And if we've got labour working on the production of these servers, then this is the part which can benefit from the learning curve. If you're not familiar with the learning curve, let me tell you, it's about that familiarity with processes that enables you to do things more quickly, and obviously with computerized machines or even mechanical machines, once you start them running on a process, the machine itself doesn't become more proficient because it's already set up, so it has a predetermined level of proficiency, and so the learning curve wouldn't apply to the machines, only to the people who are used to make them. So the learning curve suits standard processes. Now, when we're looking at the bespoke servers, I try to have a think about whether the learning curve would be applicable to that as well. My conclusion was that if we're dealing with a bespoke server and we've got a member of staff who's been working on bespoke servers for the last couple of years, that member of staff is likely to be more proficient and quicker, and therefore able to produce more than a new member of staff just joining us without the same level of experience. Now, in terms of the first type of learning curve, where it's an identical process time and time again, we could identify quite a precise percentage learning curve. We could have a rate of learning that we're able to identify in quite precise terms. And as I'm well aware with people who are running businesses where learning curves apply, if people don't come up to speed within a probationary period, then they would tend to be considered unsuitable for the job and they will be released, or that they will be told that their probation hasn't been successful and they will be asked to leave. And you could imagine that with the standard processes, but I don't think that you could apply a precise learning curve rate to the bespoke servers. I think it would have to be a more vague recognition that somebody becomes more proficient the more experience that they've had. And if you are thinking about this in terms of other trades where it might apply, then you could imagine someone who's working for a plumber or an electrician, and they do lots of different jobs. But if they've done a particular type of job before, they're likely to be slightly quicker at it the next time they do it. And these assembly of the bespoke servers would be that they would be different from one to another, but there would be similarities alongside those differences. Oh, I'm pleased to see Ziad's back. Good. And so that if you were asked to discuss learning curve in the context of the production of servers for SparkSafe, then I would be saying that a true learning curve applies in the early process, but that in the bespoke servers, the HPC ones, there would be increased proficiency, and that would allow for a reduction in the time that it would take somebody that's more proficient, but it would be more difficult to apply a specific rate to that. And then in relation to the pre-scene, we've got this point here which says if the process time is reduced, the capacity can increase. I've sort of homed in on this in previous classes, and I think it's well worth me homing in again on one of the early pages, and I've just managed to miss it. We are told that they're working at full capacity, and that when a big HPC job comes in, it sort of holds up the whole production because it takes up so much of their capacity. Yes, that's on the bottom of page 6. It says, despite the growth in available power for the demand for SparkSpace servers continue to rise, and the SparkSpace assembly lines are at near 100% capacity. They're working 24 hours a day, 7 days a week, and the backlogs can quickly build when significant HPC configuration orders are placed. And Suchi can't hear me. Let me see whether that's something of my making. That says mute. Anyone else not able to hear? Oh, thank you, Kamiri. Suchi, do try logging in again. Okay, so I can understand Suchi's come off the participants list as he relogs in, and then he'll be back with us. Okay. But yes, certainly if we are able to use the learning curve, Gavin, thank you. There is a real value that you only actually recognise at a firm that's operating at full capacity. So it's interesting that we are told that they are at full capacity, because that invariably will have a, oh, hello, nice to see you in the top corner. Oh, you've disappeared. Oh, shame. That was quite nice. Yeah, if we can increase our capacity, that will enable us to make more things. It isn't as if we would have spare capacity. We don't have enough capacity as it is. All right, any further questions based on the learning curve aspect before I start to go through some past tasks? I'll give you 2 or 3 minutes to think about this while I just nip off. I'm going to go for Lou, and then I'll be right back. Hello and welcome back. Can't hear you. Well, Hi, Zia. I think you might not be able to hear me because I wasn't here. Can you hear me now? I gave everyone a little break while I just nipped off to the toilet. But I'm back now. Oh, that's good. No, Zia, don't panic. The I can't hear you may well be because I wasn't talking. Okay, lovely. I haven't had any questions about either of these topics, so I will assume that it's fine for me to proceed, and we'll start to look at some of the past tasks. And amongst other things, I can look at the ways that these were answered when they were set. I think this is interesting. Within my analysis of the past exams, this particular syllabus outcome wasn't examined in the May 2016 exam. Now, there's all sorts of dangers of trying to read too much into this, but I would expect that the examiner is probably working on a system whereby they try to include all the lead outcomes over a number of diets of exams. And given that there are 5 variants and on average 2 elements to each variant, 2 elements to each section, then there are effectively 50 questions every time there's an exam. So for 50 questions to miss the P2A1 syllabus area does suggest to me that there may be a fairly good chance of this particular area of the P2 syllabus being examined in the August case study for Spark Space. Okay, so I've said that it wasn't tested and that the previous exam was in February and that's when it was tested. Let me go back to try and address the question that Ziad's asked that I think is relevant, and I think it's probably worth me digressing just for a moment. If I can copy it, I will. Copy and duplicate the slide. I think the chat box is marvelous, but I think it's quite nice to see what I'm getting at here. So, where do you think the bespoke server can't have learning effect? Right. I think the answer to that is I think it can. And I think the bespoke server can have a learning effect in 2 different ways. I think on the basic assembly, I think there's a learning rate with an identifiable percentage. So I would fully expect to see a learning rate on the basic assembly of bespoke and the generic servers, which will be very similar. The basic assembly can be quicker and just as good the more proficient a member of staff is. I also think that there is a learning rate which might not have an identifiable percentage on the fine-tuning, misspelling, of the bespoke, and I'll put HPC systems. Mainly okay. On fine-tuning of the bespoke system, mainly because they will tend to be different, but some processes will have been done before. So it's not the same precise rate, but yes, I do think so. So if I had led you to think that there wouldn't be a learning curve, then I hope I've addressed that, and that you can see that there would be. And yes, I agree with you with your point about the product life cycle. Let's put a new slide in there. Can I get all the words in? Yes, okay. Product life cycle costing, most appropriate. I would say, I know that we've got something coming up later where I talk about the life cycle description. Maybe it doesn't. There is reference in one of the articles to a system that will go up to the year 2000. Just quickly check. Around about 20 or something like that. 29, is it? Yes. We're offering upgrades of equipment up to the end of 2022. I think that 2022, although it's only 6 years away, or 6.5 years away, this industry is moving so fast that any products now would probably be obsolete by the end of 2022. I think life cycles are likely to be short. We know that, that there's reference to Moore's law. So I know, and I also know that, of course, Moore's law, which is also on page 7. We're not doubling every year anymore, but doubling every 2 years. It's still a dramatic increase, and of course, if you double from 30 to 60, then that looks rather fantastic as a 100% increase. If you double from 60 to 120, that's an even bigger increase. If you double from 120 to 240, then that's an even bigger increase. So although percentage-wise, the doubling seems to be the same, in terms of the numbers, it's far greater. So the fact that it's now slipped down to every 2 years, I think is inevitable, and it will probably take 3 and 4 years in future. But it's still the density of components in a processor is still doubling, even if the time period it's taking is getting slightly longer. So life cycles are likely to be short, and because life cycles are short, costs must be recovered quickly. These are costs that we are incurring, and we can't be investment appraisal should be over short time periods. You know, any suggestion Zero, I think you're going to have to try and explain what you mean by the business. But investment appraisal should be over short time periods because of this. And I would say that you need to be looking at, I mean, even if you think about the computerized equipment that you use at work or you're using at the moment, in many cases it wouldn't have been around a couple of years ago. So these whole supercomputers and data processing moving very fast. Yes, we may well build in upgrades might help achieve sales and agreeing to stick with companies in order to then be able to keep their servers relevant. Right. Okay, good. I think I've addressed Ziad's points. If there are any things that anyone, including Ziad, has raised and I've missed, then please feel free to say now. I will be about to switch into the tasks that were set in February, and it would make sense to try and address these points before, if there are any points in relation to what we've done so far, to do them now rather than break off from the past questions. Okay. All right. So all of these questions really all related to P2A1, and P2A1, as you may recall, was evaluate techniques for analysing and managing cost for competitive advantage. It's marvellous. And then we can look at the specific requirements. And I'll just repeat in case anybody missed it. P2A1 was not examined in May 2016. We've had 50 questions. Well, in fact, it's slightly more than 50 questions because sometimes they have 3 elements in the task. And none of them addressed what I would consider to be a 12th of the management level syllabus. So it may well come back this time. It certainly got a good coverage in February, and we'll look at those questions, and I'll digress and look at how those questions could be asked in August. So these are the tasks 1, 2, 3, 4, 5, 6. I've got just under 10 minutes on each, but I'm happy to focus in on individual questions, and even if that means that we don't actually complete all of them. I think that in my case, if you have a thorough understanding of the ones that we do, then that is actually probably better than me superficially covering all 6. And I know that's completely opposite from what I would tell you in your exam. Your exam, you've got to answer every question that you've got. Right, let's look at the first one. This was advise on the value chain and advise on staff involvement in creating value. This was a pizza chain of restaurants, and we would be, whether the candidates were asked to what would a value chain analysis involve in the case of Pizza Time, and how might we involve our staff more in creating value? Well, if I change those words to what would a value chain analysis involve in the case of Sparkspace, and how might we involve our staff more in creating value, I could have one of the questions that's going to come up in August. It's a fairly straightforward way of asking the question. Fair enough, the individual detail in the answer is going to differ because we're dealing with a different company that's dealing with a different type of product. But in a lot of respects, a pizza chain where there's an element of face-to-face customer contact between the person who actually is the waiter on the customer's table, taking them their pizza, and the person who is installing the computer and installing the server and has to deal with the client or the staff of the client, then you begin to think, well, perhaps in this aspect of management accounting, the running of a pizza restaurant chain and the running of a server producing company are not that far apart. And then the second part of the question, really, I think that comes from another section of the syllabus, which was secondly, the chief executive was unsure as to whether we should focus on value chain analysis in a low cost strategy or in a differentiation strategy, is very much looking at another aspect of Porter, and that would be the differentiation versus low cost aspect, and the avoidance of stuck in the middle. Okay. So here, please draft a paper and I will review it. Undo my covering. Right. So this is what they had to say. Candidates had a clear understanding of the value chain, but tended not to adapt their knowledge in response to the scenario. Okay, so here's my advice. Here's my advice. I would say you must always, when you write your answers, you must always be absolutely clear about this in case there is the slightest element of doubt. I'm just going to list 1, 2, 3, 4, 5, 6, 7. There are 7 of you attending, and there are probably a lot more than 7 of you watching this in the recorded format. We had a question here, and I'm just going to go back to the question. It was to advise on what would a value chain analysis involve, and pardon me if I shout this, in the case of, and it could be Sparkspace, and how might we involve our staff more in creating value? The and indicates that there's two questions, and the word spark space, or in the previous one, the word pizza time, means you've got to answer about spark space. You mustn't give them an answer that shows off your knowledge of the value chain, because that isn't enough. Ziad's asked me a question that I don't quite understand, so I'm going to press on, and I'm going to say yes. I don't quite understand why we might have something different, but anyway, I would want you to make sure that you know the contents of the value chain, and I think this question lends itself nicely to a nice layout. And if I was planning my answer to this, I would have as my headings inbound logistics, you know, these primary ones, operations, outbound logistics. I should be giving you a chance to butt in and tell me the ones that you know. Sales and marketing. Here we have it. Then we've got after sales service. And then you've got those support activities, procurement. You've got the technology. Must be critical, mustn't it, within our firm? We've got infrastructure, and we've got HR. And what I would do if I was answering this question is I would use these as my headings, and then I would write a paragraph or maybe two paragraphs under each of these headings, depending on how appropriate it is. And that makes it so easy for the marker to give you the marks, so long as you're talking about the inbound logistics at SparkSpace. And presumably, if they're giving you a question like this, they're going to give you some information in the unseen about it. The operations, the way in which we add value, all the way through, you've got to be talking about adding value, how the margin is being generated because of what these various activities are doing. Candidates tend to pick up marks for appreciating the role of restaurant staff in contributing to the generation of value through attracting repeat custom. So I would say that the sales and marketing and the after sales service, well, these are very expensive purchases, particularly the HPC ones. I mean, I was identifying on average that we were making a surplus of 3.5 million. So it's a huge amount of money. So the after sales service is probably what would clinch the deal. You could imagine that Eastland's meteorological system needs to be upgraded or replaced. They've come to SparkSpace, and SparkSpace has said, well, talk to Westland, because we've done one for them, and that's the best reassurance that you can have that we do a good job. So they go off and they talk to Westland, and they're beginning to get a bit worried. They know they're going to be spending a vast amount of money. And one of the things that they're saying, well, how helpful are they when something goes wrong? At which point, we are hoping that Westland would say, oh, well, at the slightest thing that went wrong, SparkSpace was straight back to us, and they either resolved it with us over the phone or they sent an engineer around. And that would be one of those key aspects within the process of making up their mind whether they want to have a similar system for metrology in Eastland that would clinch the deal. So do think about all of the contents of the value chain, but do it in the context of Spark Space. Look again, I don't know if I can highlight this because these are cut and paste, but the criticism in February, but tended not to adapt their knowledge in response to the scenario. So make absolutely sure that every paragraph that you write is in the context of Spark Space. That way you're able to earn the marks. Good. Okay, so fair enough. That was one of these questions. So we're looking our way through how this has been tested. And there was this second half of the sentence. And how might we involve our staff more in creating value? So make sure that the staff element of creating value is so important. We were talking a little bit about operations in the first hour, and you could see that the way that the production staff are adding value is simply because they're learning the processes, they're becoming more proficient, and as such they're able to complete more work in the same amount of time. That learning curve aspect. Okay. Let me move on to the next of my example questions, and I'm keeping an eye on the chat box. I think Ziad's happy, but if he isn't and he wants to come back, he's more than welcome. Identify potential opportunities. What will be the difficulties associated with predicting the profitability of a new sales channel? Well, for us, it may not be a sales channel, but anyway, what decisions will we have to make about the delivery method and location of preparation facilities before we start to analyze potential profitability? So, sure, I guess where you are all based, let me have a look. Aswadi, Gavin, Kumari, Suchi, Trost, Wilfred, and Ziad.